You've probably been told your whole life, buy a house or your rent money is just wasted. But is that actually true? Today, we're going to run the real numbers. If you invest the exact same money in both scenarios, which one actually makes you richer after 20 years? By the end of this video, you might completely change your mind. Most people believe renting means throwing money away. Every month, your rent check goes straight into your landlord's pocket and you get nothing back. That's why pay the mortgage, own your home feels like the obvious, smart choice.
But there's a huge flaw in this thinking. People only look at one side of the equation. They see the house as an asset, but they never calculate how much money gets locked into that house, or what that same money could have grown into if invested elsewhere. Let's take an example. Say a house costs $400,000. Down payment, $80,000. That's 20% of the price. Loan amount, $320,000 on a 20-year mortgage at 7% interest.
Monthly mortgage payment, roughly $2,480 a month. Total interest paid over 20 years, roughly $275,000. On top of that, property tax, maintenance, and repairs add extra costs every single year. Add it all up, $80,000 down payment, plus $320,000 principal, plus $275,000 interest. That's roughly $675,000 total, spent over 20 years. Yes, at the end, you own the house outright. But the real question is, what if that same money had gone somewhere else?
Now let's look at renting the same kind of property, say $1,800 a month. Here's the gap. Mortgage was $2,480. Rent is $1,800. That leaves $680 extra every month. If you put that into an index fund SIP and also invest that $80,000 down payment in the market instead, what happens? Assuming an average 9% annual market return, that $80,000 lump sum grows to roughly $450,000 in 20 years. The $680 monthly investment grows to roughly $430,000 in 20 years. Total portfolio, roughly $880,000. And during all this time, you still had a place to live. You were just renting it. Now let's compare side by side. Buying, after 20 years, you own one house worth maybe $500,000, $600,000 depending on appreciation and location. Renting plus investing, after 20 years, an investment portfolio worth around $880,000.
Plus, the flexibility to move anywhere, anytime. So if you're a disciplined investor, renting can actually build more wealth. But this only works if you actually invest that extra money every single month, not spend it. But this formula doesn't apply everywhere. A few things to keep in mind. If your local rent-to-price ratio is low, common in smaller cities, buying can make more sense. If you're not disciplined enough to actually invest, a house forces you to save through equity.
A home has emotional and stability value too. Kids' schooling, family roots, long-term security. Real estate is illiquid. In a market crash, you can sell stocks in seconds, not a house. So what's the final answer? It depends on your city, your investing discipline, and your life goals. But if we're purely talking about building wealth, the numbers clearly show. Renting and investing the difference usually wins, in most cases. If this video changed how you think about it, drop a comment below. Are you team rent or team buy? Next video, index funds versus high yield savings. Subscribe and hit the bell so you don't miss it.